Right, everyone, this is Peter. All right, welcome, welcome. All right, let me get my screen set up. All right, so this is episode number 17. Can you believe that? We're 17 strong. And I just want to thank you so much for hanging out with me for 17 straight weeks. Hope you're having fun. Hope you learned a lot. And all right, so what we're going to do, we're going to get started. What I want to do is make sure you can hear me. Share with me in the chat your name and where you're calling from or where you're signing in from. All right. So I see Nicole from Virginia. I have Jay, Vicky. All right. Ricardo from San Diego. All right. Harpeep. All right. I have Eddie from Texas, Annie from Memphis. I have a Peter here. Let's see. I see a Peter there. All right. What a great name you have there. I see Chauncey from California, Valerie from Florida. All right, names are rolling in. Michael from Philadelphia, someone from El Salvador. All right, welcome. Cassandra, St. Louis. I have Bart from Pittsburgh. All right, we are covering the entire United States. So thanks, everyone. I'm going to adjust my camera. Give me a second here. There you go. Okay, we are live. All right, so you got to excuse the technical full pause because when you're live, you're just live. Anything can happen. All right, so we're going to get started here. Now that I see everyone, tonight I have a really good 1 hour for you. We're going to talk about planning if you are or how to be a commercial real estate investor as a busy professional. I have an amazing guest. I'll share their story in a second. It's going to be incredible. All right, but I'm going to start off here. As you know, I do a lot of coaching, and one thing I want to share with you is to get started is every deal has a story. Okay, every deal. The property, the owner has a story, right? The the income expenses have a story, right? The maintenance of the property has a story. The market has a story. And the more you can get the story of the property, the more you understand the deal and the more you can put things together. Okay. So getting the story is so important. Getting the story of the deal. Well, let me just say this. If the deal doesn't have a story, what do you have to look forward to? Right? What do you really have to look forward to? Probably nothing. So the more you get the story, the better the better you understand the deal, the more likely you can put together seller financing, get a lower price, see if the rents can go up, all that. So the story is very, very important. Okay. I'm going to share with you a quick story of a student deal that I will show you a slide of the student deal, but get this story. This is why it's so important to understand the story of the deal, because our students' ability to get the story turned this deal from an average one into one we probably wouldn't do into one where he doubled the value and he's created $1 million in equity. Okay. And in 2 years. So here's what happened. And this student lives near me. Okay. All right. So he found this property over in Kentucky. All right. And direct to the seller. And the seller was maybe 78 to 80 years old, our perfect seller, looking to get out of the business. And the seller was able to get really good financing because he did what we call LURA, Lura. It's a it's a government entity that allows you to get favorable financing if you can cap the rents and rent to more lower income people. So it's called a low income low income housing tax credit property, right? Where their rents are capped if you're in this program. So the seller was in this program, and so he couldn't raise the rents. The rents were stuck at $800. Okay, and it has a 15-year program linked to it. Okay, so we get the story where we're going to pass on it until we dug more into the story, and we realized that next year this tax credit program is expiring, right? So what does that mean? That means we can take the rents from 750 to 800 to 1150, right? And the seller didn't know that. He was totally burnt out. He was done. Make a long story short, we bought this property. All the rents now over the last couple of years are 1150 and higher. and the property now has the value has doubled, right? So that is the value of getting the story on the property. So my main point to this story is to this story is every property has a story. Get the story. Okay. Understand what the story is. Got it? All right. Just to make sure you understand that. Okay. All right. So what I want to do now is share my screen here so we can get this training on the road here. All right. There we go. All right. Where am I? Share screen. There we go. Okay. And slideshow. Here we go. Current slide. All right. Take a look at that. All right. There we go. All right. So tonight's presentation is on building a commercialist portfolio for busy professionals. I want to start off with sharing this couple here. These are two of our students, wonderful people, incredible people. Their names are Josh and Abby. You're going to meet them in a few minutes. Okay. They are the ultimate busy professionals. Josh runs a demanding furniture manufacturing company. He's raising three boys. Josh is also in seminary school. Okay. Abby is a mom of three, incredible mom. Look at those cute little kids there. She's a physical therapist and entrepreneur. And amazingly, they both participate in grueling ultra marathons, right? We'll talk about that more today because they just finished one a couple days ago. They're going to share that story. But look at this. In the midst of all this, they purchased 18 units, okay? A 12-unit multifamily and a 6-unit multifamily. And they did it, so can you. So we're going to share with you tonight how they did it. And if you can emulate what they did, you can do exactly what they did. All right? Okay. So we're going to start off with a couple of polls. All right? Like we always do here. These polls help me design more material and really understand what we want to do in the next 45 minutes. Okay. All right. So I want to ask this current question here. Take this poll. All right. Here's the poll. Can you see that? It says, at your current pace, how long will it take you to reach true financial freedom? Make one choice. Is it 1 to 5 years? Is it 5 to 10 years? Is it 10 to 20 years? Or honestly, probably never. All right. So go ahead and put the answer in here. All right. I'll give you the answer. Looks like what's leading the way is 1 to 5 years. All right. Secondly is 5 to 10 years, 16%. And honestly, probably never. Well, my goal is to change that tonight. Okay. To encourage you that we can do something about that. All right. Okay. So we're like, looks like 1 to 5 years is 47%. That's really good. That's really good. Okay. I'm going to end the poll there. Okay. Thank you for that. Then I have a second poll. Okay. And here's the second poll real quick. This really helps me. Okay. If you could buy just one commercial property this year while keeping your 9 to 5 job, what would be the biggest impact on your life? Okay. Finally, having a real exit strategy to leave your job, to create generational wealth to pass down to your kids, peace of mind knowing you have a second stream of income, and proving to yourself that you can actually do this. Okay. And my guest tonight has all of these answers, and you're going to hear their stories. Incredible. All right. Looks like, wow, looks like we're about 25% all across here. It's pretty amazing. Maybe 27% on creating generational wealth to pass down to your kids. That is awesome. All right. Guess what? We are about even there. So they're all about 25%. So great answer. This helps me tremendously in knowing what to teach on and help you on your first deal. Okay. So thanks for participating there. All right. Okay. I'm going to go back there. All right. Okay. Thank you for that. All right. So we're going to continue on here. And what I want to do here is you can see this picture of this guy here, right? He's a certified busy professional, right? And it's a problem. So I'm going to break tonight will be about the problem, the opportunity, and the result. Okay. Here's the problem. Working 40 to 6 hours a week, making your company rich while accumulating minimal cash flowing assets on your own. That's a problem, right? And that's Way too much of America is like that. Way too much. Okay. The opportunity is to accumulate commercial real estate, and also believe that it takes less time than you think. I'm going to prove that to you tonight. And here's the result if you can get into commercial real estate. You're going to create passive income that replaces your W 2, speeds up retirement, and gives you back control of your time. Okay. And the last word is my favorite. It says, and options. Do you see that? Options are very, very important. Okay. Quick story. When I first started, I didn't have any options, right? Single parent, busted my butt. I started buying cash flowing properties, right? Small multifamily, growing my portfolio. All of a sudden, I started having options. The best option that I will never forget was I was able to work, instead of working 5 days a week and even on the weekends, I told my CEO, hey, I'm going to cut down to 3 days a week. And in those 3 days, I worked. Other 2 days, I was able to drive my son and his friends to school. To me, that was an ultimate flex. Okay, was to be able to do that. So real estate will give you options. Okay, what options do you want? Okay, to work less, to know that if your job downsizes you, that you're okay. We had a student that just bought a property. He's in the tech field, and guess what? Last week he got laid off, right? But is he nervous? Somewhat, but guess what? He has a cash flowing asset now. Okay, so that's what commercial real estate can do for you. Gives you options. All right, so I'm going to share the 5 steps with you. It's going to help you. Okay, and then I also have in store the go no go game right after this slide. Right. So number one is commercial real estate investing adjusts to your schedule is completely different from residential investing. Okay. So I want you to shift your thinking from how many hours to what actions should I take. You do what you can when you can. I'll explain that a little. I'll break that down for you in a little bit. All right. Number two is to get educated. Watch our trainings, read our book, take a shortcut, get mentored. Okay. When it's convenient. All right. So I'm going to, my whole goal tonight is share with you that you can invest in commercial real estate part-time and be successful. Okay. I would say over 90% of our students have jobs full-time, very busy, but they still close deals. I'm going to share with you tonight what that formula is. Number 3 and number 4 is very important. Okay. Is focus, right? Choose one property type, either multifamily, self-storage, mobile home parks. It can be flex space. It can be, RV parks, but choose one property type is very important. Okay. And number 4 is to choose one location, not one city, because the city is too small. You need to choose one county because the more of a population we have, the more opportunities we have. Okay. So I have this acronym, FOCUS, FOCUS, follow one course until successful. Okay. That's what we teach our students. We don't go here, go there, go there, go there. We focus. Focus is so important. There's power in focus. All right. So now I'm going to share with you a interactive session. It's called Go No Go. Some of you have already played it before, and we're going to play it now. All right. And it concerns what I just shared. All right. Here's the deal scenario. You find a great 16-unit off-market deal that cash flows well. The seller's motivated, but they want a very, very fast close. Okay. You are worried if you have time. So is this a go or no go? Put it in the chat. Is this a go or no go? Okay. It's a great 16-unit multifamily deals off market. It cash flows, everything that you want. Seller's motivated. Again, everything you want, but he wants a fast close. You are worried you don't have time. What do? I might put it into the chat there. All right. Whoops, what happened there? All right. Put it in the chat there. All right. We have a lot of goes. We have a lot of goes. All right. The chat's going crazy. No goes. A lot of no goes. A lot of no goes. All right. All right. No goes. All right. I have a lot of no goes. Anything else? Right. I want to share something with you. Right. Here's the answer. The answer, this is a go. The reason why it's a go is you can't afford not to do a deal like this. Okay. You're thinking it's a no-go because you're up, you don't have, you think you don't have enough time. I tell you, commercial real estate is different. Okay. Look at this realistic commercial time. So when you get a property under contract, a commercial property, 30 days to in due diligence inspections, you get 3 weeks to get your loan together and another 2 to 3 weeks for title and closing. We're talking 60 days, right? And this guy wants a fast close. Right? What I'm telling you as your coach is because this deal is potentially life saving, you need to have this deal be a go. Get it under contract, and all this commercial timeline, guess what? We'll just get an extension. Okay? Don't let these timelines get you all bottled up and freeze you. All right? In residential real estate, we can't do this. Residential real estate, the time is compressed. In commercial, it's expanded. We work in blocks of time. We work with inspections. We work with the bank. We work the closing, right? So you can extend each, okay? This is why commercial is so different, and you can do this part-time, okay? Hopefully you understand that. It's really important, okay? All right, now, all right, so let's go to step number 2. This is what I call the time myth, clock time versus calendar time. Look at their first point. You do not need 20 to 40 extra hours per week. Our guests, Josh and Abby, do not have an extra 20 to 40 hours per week to do this, okay? And in commercial real estate runs on calendar milestones, not clock hours, okay? So we run on contract deadlines, due diligence period, financing timelines, and closing dates. That's what drives the deal, okay? Again, in residential real estate, everything is compressed. You have like 5 to 7 days to inspect your single family home. Commercial, we get 30 calendar days. Sometimes, we get more than that. Okay, just for due diligence. Okay, all right. Now here is another go no go situation concerning clock time versus calendar time. Here's the situation. Put your answers in the chat. You work 50 hours a week at your W-2 job. You find a 12-unit apartment building that looks like a great deal, but it needs a lot of cosmetic work. You plan to spend your evenings and weekends doing the painting and flooring yourself to save money and force appreciation. This is a go or no go. Put it in the chat. Go or no go. All right. We have go, no go. All right. Looks like we evenly split on the go or no go. All right. Here's the answer. All right. So this is a no go. All right. Ashley, I want you to do the deal, but how you go about it needs to be different. Okay. Here's a trap. A busy professional like yourself, your advantage is your W-2 income, not your free time. Okay. So if you trade your limited clock time for sweat equity, you're going to burn out and stall your portfolio. You can't do everything yourself. Okay. So the solution is operate on calendar time. Okay. This is commercial real estate. You're going to hire contractors. Okay. You're going to hire a property manager. You're going to hire people to do the work for you. You are going to manage the timeline. Okay. Not swing the hammer yourself. Okay. And your job is to manage the project, not do the project. All right. So in fact, I want to share this step 3 with you. This is step 3 is financing strategies. You don't need millions to start. If some of you have been in our previous Tuesday night calls, you know that we are big fans of creative creative financing for commercial real estate. I believe we're the best at it. And in this case, we did a little bit of creativity, but in the future, we will probably do another Tuesday night to teach you how to do all that. But look at this case study. This is Dave, one of our students, full-time truck driver, built a $6 million portfolio, 45 units in 5 years. Yes, it does take 5 years to build something this substantial, okay? Commercial is not overnight. So on properties 1 or 2, he used the HELOC for the down payments with local banks. Properties 3, he used the HELOC again. Once he paid back, he put the HELOC on his personal residence and he bought the 3rd property in cash. Okay, he raised the rent, he raised the NOI, and significantly increased property values. Then he refinanced strategically. All right, that's what we taught him to do. Did a fantastic job on it. We're gonna post Dave's video in the chat right there. So team, can you post Dave's video in the chat right there so they can read it. Thank you, team. All right. And then, so here's part two of Dave. He did a cash out refi in the first three properties, allowed him to pay off his HELOC completely. His new net worth qualified him for a commercial line of credit. So the bank, which is a small bank, gave him a line of credit. So he used a line of credit to fund his next 4, 5, 6, and 7 properties. Okay, so it's kind of a finance arbitrage that he did. Okay, so he it says this strategic use of debt accelerated his portfolio growth without needing millions of dollars in cash. So Dave started off with a HELOC. Okay, if you guys have a HELOC out there with you, this is what's possible. All right, so Dave is now a retired truck driver. He is retired. Okay, and he's a full-time real estate investor now. Okay, I have a question for you. Quick change of subject, but this is really important, okay, as a benefit of being a full-time real estate investor. What is the significance of Dave being a REP? REP means real estate professional, okay? Who knows why that's important? What does that give you? All right, explain to the rest of our audience, okay? Put that in the chat. What is the significance of Dave being an REP, right? Real estate professional, as per the IRS. Okay, some people say tax savings, freedom, tax benefits, tax advantages. Yes. When you can spend more time on your real estate portfolio than you do on your job, like Dave, you qualify to be a real estate professional as per the IRS. At that point, you get unlimited tax benefits. All the limits you can throw off, you get right off everything. Okay. This speaker you're looking here, I write this off. The webcam I write off because I'm a real estate professional. I do real estate full time. So when you get to that point, like Dave, you get unlimited tax write off. Really, it's amazing. Okay. All right. Now, and by the way, Dave is now a treasured coach of ours. So if you want to learn more about Dave, I'll give you an opportunity tonight. You can speak to him, be coached by him. Dave is incredible. He's really incredible. All right. Okay. All right. Here's the game we're going to play here. You have $150,000 in equity. Okay. Pay close attention. In your primary residence, you take out a HELOC at 7% interest. You use that HELOC as a down payment to purchase an 8-unit apartment building that produces a 12% cash on cash return. All right. Is this a go or no go? All right. Put your answers in here. All right. I see a lot of goes. I see a lot of goes. I see a lot of goes. Okay, great. Now I saw one no go. All right. So I'm going to share with you why this is a go. Okay. It's a go. We call this is kind of what Dave did, right? This is the exact arbitrage method that Dave used to build his portfolio. You're borrowing the money at a lower rate and investing it at a higher return, and you capture the spread. Okay, so Dave is borrowing at 7%. His deals are producing a 12% cash on cash return when he goes in, and then the spread is 5%. So Dave's deal can actually afford to pay for his HELOC that he used, plus have money left over. Okay, and then of course, down the road, we're going to increase the rents, increasing NOI, so the spread gets even bigger, right? So very important concept when you want to use your HELOC or anything else as a source of a down payment. All right? Okay. All right. So step 4 is to find the right deals. You want to buy B and C class properties in a great location. Okay. You want to target B and C properties. You can, as I say here, you can fix a property, but you cannot fix a bad location. Remember that. All right. So we have a case study, Ken, right? I'm going to try to get him next week on our show here. He bought a 24 unit at $51,000 per door. Okay. And it recently appraised for $87,500 per door. And basically what he did was raise the rents. Okay. All right. And I'm going to share with you more about Ken's property, but I have a question for you first before I get there. Why don't we target A-class properties? Put that in the chat. Why don't we target A-class properties? I want to make sure you guys understand that. And for those that don't understand, that are new, this needs to be talked about. Okay. So Michelle says most are not good deals. Good. All right. Eric says, Carlos, okay. Rhodey, all right. Henry, can't force appreciate. Someone says too expensive. Someone says you can't add value. Yeah. Okay. Remember we talked about getting the story in the property. All right. So the story in an A-class property is very minimal. All right. You have really nothing to look forward to. So when you target an A-class, it's high price, best neighborhood. The rents are maxed out. So the story is really not there. You can't really force appreciate. So there's really not too much to look forward to. Okay. Not, not a good idea to do when you're a beginner. Okay. This is good for me and not for you. All right. Because you're just starting out. You want to buy, raise the rents, build up, 1031 exchange, buy a larger property. Okay. You can't do that with an A class. All right. Okay. Now, I'm going to go here before I get to Ken. So I'm going to set Ken's deal up here. So the best deals are not on the MLS or LoopNet, right? You need to go on market. All right. And the benefits are no bidding wars, better terms. You get motivated sellers. Seller financing is very possible when you go off market. Okay. And then forced appreciation is probably the biggest benefit here. And that's what we want. And that turns me to Ken's deal here. Here's Ken's deal. All right. Look at Ken's deal. All right. Ken's on the video with me. Team, can you post Ken's video on the screen there? So Ken purchased this property in 2023, 24 unit, 1.21 million. Here's a January 20th, 2026 appraisal for $2.1 million. Okay, so this is a copy of the appraisal that he pulled off. So Ken found this property. The seller was 70 to 80 years old. And guess what? If you recall, this is the story I was talking about, but the student where this property was on the lower program where the rents were 750 to 800 and the lower program expired, Ken bought it, waited for it to expire, then he got the rents up from 750 to 8 to like 1150 to 12. And that's the benefit right there. Okay? So Ken understood the story. So I can't emphasize that enough. Get the story of the deal. Okay? The story is very important. Okay? All right. Game time here. All right. Here's another go, no go. A broker sends you a beautiful, fully renovated 10-unit building, is fully occupied with long-term tenants. The landscaping is perfect. The roof is brand new, and the management is in place. Okay. The broker tells you you won't have to do anything. All right. So sharing what I just shared with you just now, is this a go or no go? All right. I'm getting a lot of no goes in the chat. Put your answers in the chat. All right. Okay. I'm getting a lot of no goes. Okay. Majority of no goes. Okay. Great. Thank you. Here's the reason why. Okay. When you buy a turnkey property listed with a broker, you are paying retail price, right? For someone else's forced appreciation. So that means the person before you bought it, raised the rents, he took all the profits out of it, all the forced appreciation out of it, and he put it on the market. So what's left over for you? Nothing. Okay. There's no room left. There's no room left to add value, meaning your money will be trapped for a long time. Okay. So the solution is to look for off-market B and C class properties in great locations with forced appreciation opportunity. Okay. That's the goal here. All right. Okay. Again, I'm going to emphasize what's the deal story. If there's no story, then you have nothing to look forward to. Okay. So getting the story opens up the world of opportunities like Ken's, like Dave's, creative financing, raising capital for a good deal. The story opens up all that. Okay. So tonight, remember the story. Okay. All right. Here's step number 5. And the last one is the power of relationships. Commercial real estate is a people business. Does not matter where you went to school, the accent that you have, the color of your skin, your age does not matter. Commercial real estate will always be a relationship-based business. Okay, always. It's also a team sport. So when you have the right relationships, things go faster. Okay, finding deals goes faster, solving problems goes faster, raising money goes faster, getting your deal to the closing table and getting better deals goes faster with the right relationships. Okay. So tonight we're talking about maximizing your time and getting into this business, focusing on relationships. Relationships will really, really help you. Okay. So when you have the right people on your team, just get done faster. Right. So focus on the quality of your team. Okay. All right. So deals come from relationships. Like Ken found this 24 unit by going off market and he convinced the seller to sell to him and not to list the property. Right. The seller probably could have gotten more money if he went on the market, but Ken nurtured the relationship. He was able to buy this property from the seller at that price, $51,000 per door. Okay. And Dave, for a few of his deals, he went the broker route. So Dave is phenomenal at using brokers in his market. And I'll give you a chance to be coached by Dave later on in the program. Okay. So the people you invest in will invest in your success. All right. So here's the last game here. You just closed on a 20 unit building in a new market. You decide to hire a massive national property management company to run it. They have a beautiful corporate website, a huge call center, and they manage 10,000 units across 5 states. Okay. And you have a 20 unit. Is this a go or no go? Okay. You just close on. Do you hire these people? Is this a relationship that you want to build and nurture? All right. I have some no goes. I have a lot of, oh, okay. I would say 30%. I would say now 80% no go. Okay. So great answer. Great answer. Here's the reason why it's a no go. All right. You need to leverage the right expertise. Okay. Here's a trap. Um, massive national property management companies treat your 20 unit like a number. Okay. You will get lost in a call center because they're used to managing 100 unit properties. That's where they make their money. 100 units, 200 units. And here you come along with your small 20 unit property. Okay. That could be problematic. Okay. No personal relationship. When you call them with a problem, who knows who you would talk to, or much less get anything resolved. Okay. So the solution is to develop a relationship, find a hyper local relationship based property manager. Okay. You want that person to know what the rents are for the market, and most of all, to pick up the phone when you call them. Okay. That's how things move fast. That's how you make the most amount of money, is with the right relationship, the local person you can talk to and have a relationship. Got it? All right. Okay. Here is the wrap up here. Steps 1 through 5. Commercial real estate is not on your calendar time, on your clock time. It's calendar time. Number 3 is financing. We talked about the arbitrage method. Number 4 is finding deals, and number 5 is relationships. Okay, those summarize the 5 steps. And I can tell you what, Josh and Abby embodies all 5 of these steps. Okay, we're going to hear their story next. All right. So again, for those of you coming in late, my guest tonight, Josh and Abby, very busy people, right? Josh runs a furniture company. He's also in seminary. Abby is a wonderful mom of 3, physical therapist, entrepreneur. And guess what? They both participate in ultra marathons. Where do they get all the time, right? They even purchased 18 units with us, and they use calendar time, not clock time. So I'm going to say that if they can do it, you can do it. All right. So I'm going to bring on Josh and Abby. Let's bring on Josh and Abby. All right. They're coming on in a second. They'll be right with us. You can meet them and kind of hear their story here.
Hello.
All right, Josh and Abby. All right, welcome.
Thank you. Thank you.
All right, great, great. All right. Thank you for taking time. Ladies and gentlemen, Josh and Abby are so busy. They are in their parents' camper right now at their kids' baseball game. So they're taking time out from their baseball game to be with us tonight. That's how busy they are. So just want to say thank you to you both for sharing your story tonight.
Of course.
All right, great. All right, so I'm going to start with something I'm more interested in, and that's your ultra marathons, right? I've never done an ultra marathon. I've done regular marathons, triathlons, all that, but never an ultra. I didn't have the will to endure that much pain, right? And so we're looking at a picture here, and then this Southeastern Trail runs. And Josh, you took third place, right?
Yeah, it was a little unexpected, but they gave me the little medallion there. Uh,
Awesome. Awesome. And then Abby, you completed your first one, 31 miles.
Yes, I did.
All right. Tell everyone how much time it took you.
so mine was 6 hours and 28 minutes.
Yes. And mine was 9 hours, 9.5 hours.
All right. All right. Put in the chat. Has anyone out in the chat ever done a ultra marathon? Or do you think you can run 6 to 9 hours?
No go.
Oh,
That's funny.
no goes.
Uh,
That's awesome. That's awesome. All right. And guess what? You both have very beautiful kids. Look at that guy with those, look at the kids with those cheeks. Just amazing cheeks there.
They all have
Amazing.
cheeks,
All
yeah.
right. All right. Great. Great. All right. Okay. So let's jump into the deals here. Right. And all right. So this is your Hattiesburg deal. And so how did you find this one?
just doing some general marketing like you taught us to do. And we're fortunate to get in contact with a gentleman that was interested in selling to us.
Great. Great. So you can see it's a 12 unit and you're self-managing. And Abby, you're doing most of that work, right?
We actually do have a property manager for this one.
Yeah.
Oh, do you? Okay.
Managing the
Yeah.
manager. Hmm.
Okay. Got it. Got it. Okay. And the purchase price is 1,020,000. The down payment was only 15%, right?
Hmm.
People are kind of probably going to wonder, you probably bought this deal 5 years ago when that 15% down payment was possible. That's not the case, right?
Right.
Mm. No,
Yeah. So
Sure. Yeah.
the purchase date was when? What year? Last year?
June.
yeah, it was
Yeah.
last year.
Yeah.
Mhm.
June.
Last year. So
Beginning of
look at
last
this,
year.
ladies and gentlemen. They able to get 15% down, 6.5 interest rate. The actual cap rate is 8.45. The performance cap rate is 10%. So there's room to raise the rents. Is this right?
Oh yeah. Hmm.
For sure.
Oh,
Mhm.
okay, great, great. And you're able to get a private money investor. So they invested in 87% of the down payment for
Hmm.
60% of the deal.
Hmm.
So Josh and Abby, that means that you guys own 40%.
That's right.
Okay, great. And you guys are managing members. So even though your investor put in the 87% of the deal, you call all the shots. Is that right?
That's correct.
Mhm.
Hmm.
That's great. And your total down payment out of pocket was $10,000.
Yes.
Yeah, that's awesome. That's awesome. Okay, and tell us about your exit strategy here. What are you going to do here?
So, kind of slow playing it with just re putting the money back in for renovations and then increasing those rents, trying to get them up about $200 and then either sell into an exchange or refinance into another purchase.
Okay, got it, got it. And when you guys originally saw this deal, what did you like about it?
It was a good location.
Mhm.
Mm,
It had a lot of curb appeal. There was plenty of space. It wasn't a congested area. And where it was located, we felt like we could have some confidence in getting good tenants.
okay, okay, great, great. All right. Okay, and then let's go to your second deal. This is the 6 unit,
Mhm.
right? And is this one you're managing, Abby?
Yes, this is the one I'm managing. I do have a property manager, but we're kind of managing.
Collaborating.
Yeah, we're kind of collaborating because it's a
Oh,
little
okay.
smaller
Okay,
and
got it.
yeah.
Mhm.
Got it. All right. So
Mhm.
what did you like about this one here?
It's very similar situation. But both of these are kind of like 15 minutes from pretty large metropolitan areas, at
Hmm.
least for the southeastern United States.
Yeah.
There's not a whole lot of those, but yeah, they've got a lot of traffic, and but they're kind of in a quiet location. They have plenty of acreage associated with them, and just a good feel and a lot of opportunity for upside. So
Okay. Now is this property off the lake?
yes, sir.
Mhm.
Mhm.
Okay, great. Yeah. If you can see it on the screen there, behind on the right-hand side, there's the body of water there, right?
Mhm.
Yes.
Yeah. Okay. So on this one, the also 15% down, 6% interest rate, right? People are
Mhm.
probably wondering, how in the world did you do that? That's a local bank though, huh?
Right.
Mhm.
Mhm.
Mm-hmm. Yep. Yep. Okay. Let's see. Actual cap rate 6%, pro forma cap rate 9.5%, 9.05. So also tell me about the upside on this property. What do you look forward to here? What's the story?
Yeah, so the lady had owned it for like 15, 16 years, maybe longer. And she hadn't raised the rents really at all over that period. They were still at like 485. There was one at
Wow.
450.
Wow.
There were a couple at 500, and she just really kind of had a connection with her tenants, but she
Mm,
wanted to raise the rents, but she had gotten in a little bit, I guess, grew a little too fond, and was not really concerned about making money. She was just happy that she had somebody to talk to and had some money coming in that was consistent. She wasn't super motivated to sell, but we were able to work it out with your help.
that's awesome. That's awesome. And it says here you also have a private money investor. They put in 90% of the down payment for
Mhm.
60% of the deal. Again, you're managing members and your total down payment was 5,450 and you get 40% ownership.
Hmm.
Mhm. Yes.
Yeah, yeah. So managing members, I want to make sure that everyone understand here is whenever our students do deals, we want them to be in charge, okay? Because their investors aren't in our program. They may not understand the market or how things work, and so we want our students to be in charge. So you guys call all the shots, right? Based upon your agreement. Is that right?
Yes.
Okay. Okay. Great. Great. All right. And then what's the extra strategy on this property? What do you plan on doing?
We're working at it right now. Abby was on it today, most of the day. She's working on some exterior renovations. We've already started up in rents, and yeah, I think this one may be a shorter time frame than the 3 to 5 years that we've got listed. I think we maybe can get there too, for a refinance. So that's the game plan.
Okay. Okay. Great. All right. I have a question here. Someone is asking, what does performance cap rate mean? And how different from actual cap rate? Okay, so I'm going to answer this question. So, the pro forma cap rate is what the property can do in the future. Okay, and the actual cap rate is what the cap rate was when they actually closed on a deal. So when your deal cap rate goes from 6 to 9, that means Josh and Abby to go from 6 to 9, they have to raise the rents over time, right? And as you raise the rents, the cap rate goes up, the deal cap rate, right? And so how long do you think it'd take you to reach your performance cap rate?
Yeah, I think that we're expecting to do it within about 2 years.
Okay, 2 years. That's
We
pretty good.
yeah.
That's
Yeah.
pretty
We
good.
have three of the rents already up, and
Okay.
we haven't really made any renovations yet. So yeah.
Awesome. Awesome. Okay. Someone's asking, Josh and Abby, when you refi, do you lose your private investor? So when you refi, what's
Uh,
going to
we,
happen?
we've talked to them, and I think they want to continue to roll it into another property. So that's the our intention. That money will sit until we are, hopefully, when we do the refinance, we've already got a deal kind of loaded that's
All
ready
right.
for them to get involved in.
That's awesome. That's awesome. All right. And someone's asking, okay, CapEx. Okay. So we won't talk about that. We'll talk about that one later. Okay, great. All right. So I'm going to start here. You both are the examples of busy professionals. And how many hours a week do you both work in between? Josh, you're in seminary, you run a furniture company. Abby, you're an entrepreneur, you're mom of three, you got baseball. So how do you guys do all this?
It is definitely a juggling act, and sometimes it's a bit more organized than others. But yeah, it varies week to week depending on what we've got going on with the kids because we try to keep them a high priority. We try not to, you know, choose this, that, or the other over our children. They're kind of the reason that we're doing all this, and we don't want to miss those formative years. So our schedule is a lot centered around what we can do and how we can spend time with them as much as possible. But yeah, it's tough. Abby's spending a lot of late nights. When she demands it of me, I'm also helping. But yeah, it's just a juggling act.
Okay, great. And share with me what's your why, right? And I know the why drives you and keeps you going, right?
Mhm.
What's your why? So why did you call this? Why commercial real estate?
Well, I think you mentioned it earlier. We want to have kind of a resiliency in our financial house so that
Mm.
whenever something does happen, we're able to cope with it well. And we want to develop that for our children. And we also want to have the freedom to spend time and to invest in our kids and not, be dependent on other people to make those investments into them for us.
Yep. Very good. Very good. All right. So if someone in our audience only has 5 to 10 hours per week available, right? What should they focus on first, in your opinion, to get to where you are?
It varies person to person, but depending on where they're at as far as their knowledge of the market or knowledge of how to close a property. But if they have those kind of basic fundamentals down, then I think the focus needs to be marketing, because you can't close a deal that's not in the pipeline.
Yeah.
Uh,
Yeah,
For sure.
I agree.
Marketing.
I agree with that. Josh, I agree with you because we can teach you and show you how to analyze all day long, but if you have nothing to analyze on, what's the
mm,
use, right?
that's exactly right.
Yep. So marketing is very important.
Mhm.
And and both of these deals were off market, right?
Correct.
Yes. Mhm.
Yep. Phenomenal. Phenomenal. Abby, question for you. Okay.
Mhm.
This is a mom question. Okay.
Yeah.
So many parents feel guilty taking time away from their kids, right, to work on their side business, their real estate. How did you reframe real estate in your mind so that it felt like you were doing it for your family rather than taking time from them?
Yeah. So it takes a lot of time management. I would say at the beginning of the week, I always try and kind of sit down and, you know, plan my week out and write down all the things that have to happen that week and make sure that I'm staying organized to a certain extent. I will say I'm not a very organized person. So if you're not organized, you can still do it because that's me. But just knowing that like financial freedom is the ultimate goal for us, and knowing that you know on the days that maybe it doesn't feel super easy, it's worth it if you just keep pushing and knowing that this is for them ultimately, and just knowing when to take breaks and knowing when you have to push a little harder and get things done.
And Abby, earlier I talked about calendar time versus clock time, right?
Mhm.
And you can attest to that, right? So
Yeah.
the how long did it take you to close these deals, each one? How many months was it? How many weeks was it?
Mm.
The second deal was one of the first ones that we contacted, and that was 18 months.
Hmm.
That deal was kind of like in the back of our minds,
Yeah.
Mm-hmm.
and the second one was probably more like four,
Okay.
uh, just because there was little hiccups here and there along the way, and different things happened. But yeah, the second one was a quick one for us. Hopefully the next one that we get into is more in like the 3 month frame, and we can
Yeah.
Yeah.
start working them
Yep.
back.
All right.
Yeah.
Okay, ladies and gentlemen, you hear it from them. 4 months, which is not unusual at all. 18 months because they got busy and the seller went away, and then and Abby went back and followed up, and guess what? The seller's interested now. That's how real estate works. Okay, probably wouldn't happen in residential real estate, but in commercial real estate, these type of things happen. And Abby, would you say you rekindled the 18-month deal transaction because of the relationship? They remembered who you are.
Yeah.
Yeah.
I think that she had a positive experience with our phone or the way we talked to her, and she was interested the second time. She was like, "Look, this is what I'm willing to do. If y'all can make it happen, we'll make a
Mhm.
deal."
Yeah.
Yep. Yep. All right. Um, okay. Next question. This concerns you both as a married couple or just a couple. So for the couples listening, how do you handle the stress of real estate without it spilling over into your marriage, right? How do you keep each other motivated? I mean, you're so busy. You got real estate, you have investors, you got the three kids. How do you keep each other motivated?
Well, I think it really boils down to, not having a bad day on the same day.
Hmm.
Uh, that's really, really important.
What do you
And
mean by that, Josh?
everybody has bad days. Everybody, has emotional swings, and you might think the sky's falling this day. But when you sense your partner is in that place, you've got to say, all right, I got to quickly get my bearings about me because we
Mm,
can't both be like this right now. And you know, she's strong when I'm weak, and I've got to be strong when she's weak. And
very good.
as long as we balance that out and recognize it, and we're not both in that fight or flight, scared to death mode, then everything's going to be all right because the other one can sober the other one up.
Yeah.
Very good. Very good. All right. Um, Lot to unpack there and a lot to learn there. So I hope everyone online can see that they're so busy and, them being one is and having a common vision moving forward is very important. Okay. All right. Here's another busy professional question. So you both run 50-kilometer runs. That's 31 miles. So when you're at mile 30, okay, of a real estate deal, okay, and things get boring or difficult, what specific thought keeps you from quitting and going back into your comfort zone? Let's talk about that for a second because
Yeah,
this business is not easy, and if it were, everybody would be doing it. But it's so profitable, and
that's
so
right.
talk to us about that.
So I would say when you get to mile 31 or 30 and you've only got one to go, there's very little in your mind about the last 30 because you're like, I can finish this last one. What gets hard is when you're at, 21 or 22 and you're like, man, I've got 3 hours left. I've got a long way to go on this. And it's same thing
Mm,
whenever we were in that 4 month closing. You get to 2 months into the thing and you're like, man, we've got a long way to go.
Mhm.
How is this going to happen? We got this problem popping off, this problem's happening. And, you just have to keep believing. You got to say, for us, it's saying, Lord Jesus, I know that you're going to work this out. If you've started us on this course, you're going to sustain us through it. So that's what keeps us grounded is having faith that if the Lord set this course for our lives, that He's going to make a way for us. For other people, I don't know how they can keep going when things get hard. But for us, that's what keeps us grounded.
that's great, Josh. Uh, when you last time you and I spoke, you're halfway through your seminary school. Is that right?
That's right.
Yeah, and how um, how was that related to your real estate journey? So are those two connected at all?
Yeah. So the financial freedom for us is a means for us to be more missional in the way that we're living. Abby and I and our children, we want to have means to go. And we've battled back and forth with are we supposed to be dependent on the church? Should we, get over this desire, or is it okay for us to have this as a part of what we're going to be doing? And we
Mm,
basically what we've decided is we're going to continue in this, and we're also going to try to continue in the gospel ministry as we're going. We're not going to not pursue this, but we're also not going to wait to get started. So they go hand in hand. And oftentimes I'm battling back and forth. Do I need to go all in on seminary? Do I need to go all in on real estate investing? Why am I doing both? But yeah, we're trying to be faithful and hope that the Lord will bless the work of our hands.
awesome. Yeah, he will. Um, Josh, thank you for wearing my favorite hat, right? Go one more. So talk to us about that. So tell the audience what does that mean? Why do you wear it?
It's not for race days. It's for the workouts. It's for the midweek. It's when you don't want to do it. When you're running 2 miles or you're getting out of bed and you got to run a 6 mile easy run and you just don't want to. The hat's a reminder that it takes that effort to get the result, and it takes a little extra effort to be better than other people, and that's what we want. We want to be good. We want to be the best that we can be, and that
Yeah,
means we got to put forth effort.
that's right. That's right. And that brings me to my next question. Uh, how did uh, how did coaching help you? Do you have an incident you want to share?
I think the primary thing is giving us a lot of confidence because we were so good at talking ourselves out of
Hmm.
opportunities.
Hmm. Hmm.
And we've always had that analysis paralysis. We were I'm pretty highly technical. I like to learn. I you know, I was actually a certified, or I went and did all the schooling and all the hours for certified general appraiser in the state of
Hmm.
Mississippi. So I mean, I've
Hmm.
appraised tons of commercial property but never closed one. And so having somebody that could say, "Hey, this is a good opportunity, do it,"
Mhm.
um, was really what we needed, because we were probably going to continue to talk ourselves out of deals over and
Hmm.
over and over again for the rest of our lives.
Yeah. Yeah. Anything to add to that, Abby?
Yeah, I agree. It's really easy to sit and just dream, but to actually take those steps is a different level. And you guys helped us to take the steps and to make the moves. And even when we were nervous, we knew we had, someone who knew what they were doing and to give us that confidence that we just didn't have.
Great. And Abby, let's drill down a bit because real estate, there's always things that pop up, right?
Mhm.
And how have you been supported? You know, we have our coach Julia, who's managed like 3,500 units, and she helps you manage the property. So how is that coming along? How has she been helpful to you?
Yes, Julia is awesome. I probably drive her crazy, but she is always really prompt and she's very helpful. She'll jump on a phone call whenever, like if I message her, she's very prompt and able to help me. And she's helped me like get my rents up, how to communicate with tenants or how to communicate with my property manager. Just things that I'm just not confident in, she'll give me the answer and it sounds so good and it's exactly what I should say. So that's been very helpful.
Awesome, awesome. Ladies and gentlemen, when you find a property and you close on it, that's just a start, right? And
Mhm.
other companies don't help you after the fact, and that's what we're based on. So our company, we share in profits with our students. So in order for us to keep our doors open and pay people, our students need to be successful so we all can make money. So we have a dedicated team to help our students that close deals to maximize their cash flow. Okay. No other company does that. Okay. That's our business model, and that's why we're successful. All right. Last question, guys. Thank you. I know you got to get back to your baseball game, right? So if someone's watching right now, right, and feels stuck because of their job,
Mm.
what would you tell them to do in the next 7 days? 7 days.
Um, I think that Abby and I actually were talking about this earlier, and she made a really, really good point. And I think it really boils down to clarity of your
Hmm.
vision. And
Hmm.
so she was talking about making a list. I said, maybe more of a journal, but you got to clarify your vision. You have to figure out what it is you actually want, and then there's going to be something that comes inside of you. You're going to say, man, this is how I could pursue that. And then you have to take action.
Yeah.
So I wouldn't don't procrastinate on the action taken. Also, don't procrastinate on making your vision clear,
Mm.
Yep.
deciding what you want. If you have a wife, you need to collaborate on that vision because you don't need to have separate visions. But if y'all can come together and figure out what do we want in life, that shouldn't take 7 days to figure that out. And then you just need to take action. It's going to be pretty clear what you need to do from there.
Yeah. Anything to add, Abby, to that?
Yeah, so what I will typically do is, especially when I feel like, oh, I don't not sure what to do. I don't know where I should get, what step I should take next. I will usually like write our goals out, like our vision, and like put them on the wall
Mm.
so that we
Mm.
can see them and be like, Okay,
Yep.
is what we're doing right now getting towards those, away from those? Are we even going in the right direction so that we can actually see them? Because a lot of times it'll be like, what am I doing this for again? Like, or you'll waste days on things that just weren't really top priority or shouldn't have been. So
Yeah.
just making your vision clear in your mind and being on the same page, and then going from there.
Yeah. Yeah. Awesome. Awesome. Ladies and gentlemen, in the chat, put down one thing you learned from Abby and Josh. Okay. Put down one thing here, right? They so many nuggets here, Josh and Abby. This is so awesome. And so here's the parting question is what does the future hold for the Tomlin family? Right. So
Ooh.
are you
Yeah.
guys let's talk about that for a second because we're going to help you do whatever it is. So let's hear it.
So our vision is probably around 100 units. That's kind of our near term goal
Mhm.
for the family. Um, Selling our house, finding some a little bit more of a rural location for our kind of our base home, and then hopefully within 2 years I'll be graduated and we'll have some ministry opportunities more on an international level. We're already connected with some of those mission sending agencies, and so hopefully those opportunities will start to open up and
That's
we can
awesome.
get going.
Yeah, that's awesome. Anything to share there, Abby?
No, that's the
All right.
vision. Yeah,
Okay.
we're in
Okay.
it.
All right. Hey, just let you guys know when I did ask our group to put in what they learned, it's amazing. Someone says, lean on the Lord, determination and perseverance, write down the vision so you
Mhm.
can see them daily and take action. Be resilient, right?
Mhm.
Focus on vision, the why, the grit, determination, get it done, and going for more. Persistence, right? And not to procrastinate forever on your decisions and dreams, right? Um, so, Abby and Josh, for some of these people out here, this has been life changing. And I just want to just so they can see an actual person, not just a coach talking, but an
Right.
actual person who's done it talk about this. So I just want to say thank you. All right. Uh, so, everyone on the chat, give Josh and Abby some love. Tell them thank you so much. All right. Let's see
Thank
some
y'all.
love
Yeah.
there.
Mhm.
All right. All right. All right. Put in the chat. There you go. All right. So there you go, Josh and Abby. Much love to you there. All right. So what I want to do is ask everyone out there a question. Um, would you like to learn more about what Abby and Josh does with us? Right. We're always looking for people that we can do deals with. So does anyone out there want to learn and be like Josh and Abby? Okay. You can be single, be a couple, but are you interested in learning more? I'm going to put up a poll right here, and this poll is going to allow you to um, let me bring it up here. Let me go back. All right. And here's the poll right here. The poll is who would like to learn more about what we do here at Commercial Property Advisors, right? So, yes is the answer, or yes, but I have some questions. So, go ahead. There's an opportunity to get mentored by me and my team, right? Work with me directly, work with Julia, all across the U.S. To do exactly what Josh and Abby did. Find off-market deals, structure the financing, learn how to use private investors if we have to, learn how to set up the asset management part of this business, and then set the next goal, right? That's what we do. And Josh and Abby, they're doing exactly that, and they're doing a wonderful, wonderful job. All right. So put your answer there. I'm going to end the poll here. I have another question I want to ask you here on the same line. And that is this here, right? Would you like to speak with someone tonight? All right. So we have team members in the background, backstage, waiting to talk to you. So if you're interested in learning more about what we do, I am looking for a few more people to do deals with, and you have an opportunity tonight to speak with someone, all right, about our company, about what Josh and Abby did, about how to get started. It doesn't matter how much money you have, doesn't matter where you are, where you're starting from. All right, so put your answers there. All right. If you want to speak with someone tonight. So I have people on standby just waiting. Also, too, if you just want to schedule it later, there's an option right there to schedule it later. All right. So put your answers in there. All right. Okay. Very good. Okay. People are still answering. All right. Josh and Abby, do you guys know what the score of the game is?
No,
Score no.
there's no scoreboard in
No.
this little league. There's just you have no
Okay.
idea who's winning
All
really.
right.
I'm
Okay.
gonna assume that we're up probably like 18-4, if I had to guess,
All
because
right.
we're a tournament team and they're
That's
scrimmaging a
awesome.
park and rec league team.
All
So
right.
I'll be surprised if it's not a more of a blowout game tonight.
That's awesome. That's awesome. All right, everyone, I'm going to end this poll here. And so, uh, oh, one last thing I want to do here is I'm going to take you over to this screen here. Give me this other screen. Give me a second. And what I want to do is share one more thing for those that may be interested, right? And I'll share this screen right here. Here's the screen right there, right? And if you go to commercialpropertyadvisors.com right there, /coaching, you can put in your application right there. All right. So basically, get mentored by me, put in your state, what you want real estate to do for you, how much funds you have available, your first name, last name, email, phone number, and then click yes. So give us permission to call you, and someone will reach out to you. All right. Okay. So commercialpropertyadvisors.com /coaching to get something started there. All right. Okay. We're going to end it here. I'm going to stop my sharing screen. All right. Next, what we're going to do is there will be a video playing next. And I want you to watch this video. It's a really cool video. And before we go there, Josh and Abby, just want to say thank you so much. This has been fantastic. I'm sure you saw the chat. So I'm sure you inspired a ton of
Yeah.
people there. And I just want to say thank you so much for just sharing everything with us tonight.
Yeah,
Yes,
it's
thank
our
y'all.
pleasure. Thank you for having us.
All right. And good luck with the game. And we'll be talking soon.
Talk to you soon.
All right. Michael, take it away.